Hey, everybody, welcome back to Capital Ideas, where we celebrate the ideas that enrich our lives and the capital process that turns those ideas into reality. I'm Nick Morgan, the co-founder of ICANN, Investor Choice Advocates Network, and one of the co-hosts for today's episode.
I'm Mark Hiraide, Senior Legal Director and Policy Counsel at ICANN.
And I'm Dara Albright, co-host of Capital Ideas and a proud board member of ICANN. And today we are joined by Don Friedman, the CEO of the Digital Assets Council of Financial Professionals, the DCAFP, which is the leading provider of advisor certification in blockchain and digital assets. And Don joins us today to discuss the lack of digital asset training that's available to financial advisors and financial professionals today through the traditional SRO programs, and how DCAFP is working to fill that critical gap. So thanks for joining us today, Don.
Thanks for having me.
So let's start with, how does the lack of training impact advisors and ultimately their clients, which are really everyday retail investors?
I mean, it's huge. Our studies show, based on our surveys, 80% of clients are asking questions about crypto, and 60% of clients will leave their advisors to go to another advisor if they are not even able to articulate it and talk about it. This has nothing to do with recommending it, has simply to do with answering people's questions. And so there's already, hundreds of thousands of advisors that are deer in headlights, and the last thing you want to do is be roadkill.
Don, the traditional SROs like FINRA have in the past and currently information about various retail products like TICs, for example. They have guidance on retail sales practice regarding tenant and common interests. Why do you think they've been so slow to incorporate digital asset education into their advisor training program?
Sure. I mean, that's a great question. I think it's beyond SROs. I mean, you could also add the government into that. I mean, it's just a lack of understanding and a lack of education, and that's what we're here for. We have this course. It's an online course which educates both financial professionals as well as individual investors. And again, I think it's a lack of understanding and education, so they're kind of hands off. And that's why we're in the situation that we're in. And that's why what we offer is such a great opportunity for SROs, for government, for advisors, and for, crypto curious people.
I think the question I want to ask Don is, had Kevin Durant's financial advisor taken your course, would he have misplaced his Bitcoin? No, I'm kidding, of course. But the real question I want to ask is, tell us a little bit more about the CBDA program. Can you kind of walk us through what's involved and what topics it covers?
Absolutely. So it's an online self-study, take at your own pace course. We have a world-class faculty. We have the co-inventor of blockchain, Scott Stornetta. We have the chief scientist of the Circle stablecoin, Anders Brownworth. There are no asset managers on the teaching faculty. And so what it is it's broken up into two parts. The first half is on the tech. What is Bitcoin? What is blockchain? What are NFTs? What is DeFi? The second half of the course is on practice management. So investment thesis, rules, regulations, portfolio construction, how to talk to clients and overcome common client objections. The course qualifies for 18 CE credits, so that's CFP or IWI CE credits, and we've had thousands of financial professionals from 37 different countries take the course. There are two courses. There's a financial professional course, which is obviously a longer course, and then we have a investor course. Think of it like a crypto curious course, which is an abbreviation of that course. As I'd mentioned, for the financial professional course, it is a CBDA designation, Certified in Blockchain Digital Assets designation, which is listed in the FINRA database of professional designations. So similar to a CFP, we're very, very clear that straight from FINRA does not recognize any designations. What you do is you apply for the designation. You have to meet their criteria. And then if they approve it, you're in. And if you're not, you're not. Obviously, we got approved. And then if you take the investor course, obviously it's not a designation, but it's a certification. So that's the difference between the financial professional course and the investor course.
That's great. One of the issues is that this is such a fast-paced industry. It's changing, like I can't even say day by day. It's probably changing second by second. So how does your curriculum keep up with such, rapid changes in this industry?
Excellent question. So we launched the course in 2021. We updated it again in 2023. We did abbreviated updates in 2024. And then what we've also done is there's been 3 acts of legislation before Congress. One was the Genius Act, which is passed through Congress and signed by the president. You have the Clarity Act, which hopefully will be done by the end of the year, which is market structure. And then you also have the Anti-CBDC Surveillance Act, which also will hopefully be passed by the end of the year. So what we have done is Genius Act has been passed. So we have created a 26-minute video module, which is done by our founder, Rick Edelman, which has been added to the course. When Clarity and Anti-CBDC get passed, we will create one module which covers all 3 of those. It'll qualify for at least 1 CE credit. We also have other courses, individual courses that are offered a la carte. But if you are enrolled in the CBDA, you get access to those at no additional cost. And then lastly, we have the former, essentially, crypto cop of the SEC, David Hirsch, who's working on a module about crypto scams and other things related to that. So what we're doing is, again, and also I would add that the course itself, as I mentioned, I think will be updated in its entirety in 2026. But we're waiting for those 3 acts to be passed. So we refresh it on an as needed basis, and we add new modules as things like regulations get passed through Congress. Legislation gets passed through Congress.
This is kind of a broad question, but imagine that you were chair of the banking committee and Chairman Atkins all in one role, and could decide what role, if any, regulators should play in educating advisors in the way that you guys offer. From your perspective, what role should regulators play, if any, in ensuring financial professionals are educated on digital assets?
Well, I mean, obviously, it's in our interest if they're required to take our course. If they make that, some sort of designation is required. I'm not in the legislative branch. I'm not a regulator. I not really my place to answer that. But at the end of the day, I mean, education is critical. No matter who we speak with, whether it's a financial advisor or an asset manager, they all place education at the top of the list, and that it's paramount. And I would add to that, we look at it also as a marketing differentiator. So if you've got 300,000 plus advisors in the country, and a small percentage of them are educated on this asset class, it's a differentiator. Think about it from the standpoint, if you're interviewing a financial advisor, they give you the usual answers of, I'm fee-based, I dollar cost average, I rebalance. I mean, these are common answers that any advisor you go to are going to give you. But if you ask them the question, well, what about digital assets? Suddenly the prospect is like, hang on, you know about digital assets? Wow. I mean, I know that's a growing field. I hear about it on TV. It's in the mainstream now. Can you provide education on that? And that now is a marketing differentiator, which not only helps you serve your clients better, but increases the odds of increasing your AUM. So again, I don't think anyone would argue with the fact that education is paramount and education is most important, and being a fiduciary is critical. And there's no doubt that the legislative branches and the regulators, I think, feel the exact same way. And so whether it's us or somebody else, I think we can all agree that education is best, and it will serve the clients best as well.
You mentioned the FINRA kind of list and the application process that you went through. I know for legal CLE providers, they have to be certified. I'm not sure what the regulatory scheme is for private companies that offers continuing education credit. But does FINRA, in a way, regulate the providers of these designations?
Not to my knowledge. I mean, you fill out an application, You have to abide by that. So one of the things is for us, when you, after a year after you've been enrolled in the course, in order to renew with our course, you have to watch a renewal video, which qualifies for 1 CE credit. And that was part of the criteria when we submitted the application, is because what happens after the year? How is continuous training going on? And so that's the requirement that we were asked to meet. And so that's what we do each year. People take the renewal. I would say another thing that we've added, which chief compliance officers love about our course, is we have a CBDA good standing, which gets updated every week. So what that means is a chief compliance officer can go to our website. They don't have to call us or email us or anything like that. They can go to the website and do a self-search in terms of they're looking for, Jane Doe or whatever. And if that way they can find out whether the advisors that are within their firm are listed on the CBDA good standing, which is, they love it. It's very similar to CFP, has a similar process to where you can do a self-search in terms of who's in good standing with that designation, which is another thing, like I said, I think everybody can agree is a benefit and keeps the education process ongoing.
I love the way you just described that, Don, and the way you described the CBDA designation as a differentiator as opposed to a requirement. It seems like, and this is more of a statement, then I'll get your reaction, but it seems to me like you've got requirements like FINRA's Series 7, for example, and then you've got private designations like CFA, CFP, and now CBDA. It sounds to me like the private solutions, which I think you described as differentiators, are more fluid. They need to be. You're competing with other designations. The advisors are using your educational tools to differentiate themselves. Do you think that making it voluntary makes you more nimble, or what do you think about voluntary versus mandatory, Series 7 versus CBDA?
I mean, like I said, from a self-serving perspective, it would be better if it was mandatory for us. But the idea of the way that we put this together, there's no asset managers on the teaching faculty. Advisors don't want to be sold to. They want to be educated. And we cover it all. As a matter of fact, when we do presentations, one of our most popular presentations is how to grow your practice even if you hate Bitcoin. It's one of our most popular speaking engagements. And the reason is because there's various reasons in which it makes sense where it doesn't even matter. There's over 20% of Americans own crypto. And there's a greater likelihood that of those 20%, they're wealthy people who therefore then have a financial advisor. Think about it from a philanthropic perspective. People want to donate Bitcoin into DAFs, particularly as the asset increases in value. Think about it from a financial planning perspective. Think about it when you meet with your client once a year and you're asking them, tell me about your equities, tell me about your bonds, tell me about your cash. Do you have enough for a year? Tell me about your rental properties. I didn't sell them to you, but I need to know that. Tell me about your digital assets. When you're doing an X-ray and an overall portfolio and putting together a plan for somebody, even if you didn't sell it to them, you need to incorporate that into the overall plan. Think about tax situations. Think about presently, if you own the token itself, if you own Bitcoin, not the ETF, if you own the token itself, presently there's no wash sale rule. A lot of advisors are unaware of that. So think about 2022 when everything went bad, stocks, bonds, crypto. You had the opportunity as an advisor to tell your client, you can sell your Bitcoin, take the loss, and buy it back 10 minutes later or an hour later or a day later to maintain access to the asset class. There's an extremely strong likelihood that the client will have no idea that that's the case. So now you've provided a value add for your client. The client then goes to their friends and say, hey, my advisor told me that there's no wash sale rule, which they probably wouldn't know what a wash sale rule is. But once they explain it to them, now the client's friend is saying, wait a second, my advisor didn't tell me about that. Can you introduce me to your advisor? So it's stuff like that. Add in stuff like divorce. Historically, people have hidden assets in gold and diamonds. Now they're hiding it in Bitcoin. So again, as an advisor, to be able to do what's in the best interest of your clients is critical. And that's why these are the things that we go through in the course that can be helpful even to advisors who might hate the asset class. I would add on top of that, most advisors, not all advisors, most advisors believe in modern portfolio theory, MPT. And if you believe in MPT, you believe in a diversified portfolio. And the reality is, if you believe in a diversified portfolio, there's probably something in the portfolio that you don't like. But you do it, it's in the portfolio because you believe in MPT. And that's where digital assets could fit in again. I would also add, if you believe in MPT, you know that a more diversified portfolio leads to actually lower volatility and a greater likelihood of long-term positive results. So these are all things that we go over in the course that most advisors are level-headed. They want to do what's in the best interest of their client. And when we talk through these different points or aspects, it brings the wall down in terms of their willingness and openness to get educated on the asset class. One more thing I want to bring up is we talk about this a lot. We talk to advisors who call it 2 years ago, I don't want to have anything to do with this asset class. It's too volatile, illicit activity, I mean, you name it. But what we ask people to do is look at the data points. We can actually respect some of that from 2 years ago. But fast forward to today and look at the new current data points. You went from an administration that wanted to kill the industry to the new Trump administration who is completely for it. Every member of his cabinet owns crypto. So you've gone from major headwinds now to tailwinds. So that's number one. Number two, factor in, as we touched on earlier, that there are pieces of legislation that are making their way through Congress that are adding new data points. Obviously, data point number one is the Genius Act. The Clarity Act and the anti-CBDC will follow. So when you look at the current data points and you see how things have changed, you see how major public companies across the US are now looking at DATs, digital asset treasuries, or are embracing tokenization. Look at Larry Fink at BlackRock. These are people that were completely against it, who are now educated enough and objective enough to look at the latest data points and see how things have changed. And that's, I think, when people realize that, hey, we hear you from 2 years ago, but take a look at what's happening now. Look at the new data points and give yourself the opportunity to revisit the idea of simply getting educated on the asset class.
You know, I'll just add, I read this morning that the SEC is going to be opening up new custodians for RIAs looking to engage with crypto for their clients. So this, you know, you're definitely in the right place at the right time. And, you know, to further from Nick's question, I took the Series 65 earlier this year. And I will tell you that just from taking that exam, not only was there maybe there wasn't even I didn't have a question on my exam about digital assets. There was a very small section of even, you know, topics to learn about digital assets in that. But what's even worse is the regulators, when they taught modern portfolio theory, but when they teach that and even teach about having proper diversification, they still will include in their teaching how risky Bitcoin is or how risky digital assets is. So it's, you know, they're even teaching it as not a portfolio diversifier, but teaching it as something risky you should stay away from. So it's very interesting how that even plays out. And they're not doing anyone a service by doing that. They're hurting the advisors and they're hurting the investing public.
So the three most common questions we get from advisors are correlation. Bitcoin historically, since it was created in 2009, for the most part, there's a couple of years here and there, overall is uncorrelated to everything, stocks, bonds, oil, etc. So correlation number one. Number two is volatility. If you look at the 30-day moving average over the last 10 years, it's going down in terms of the volatility of Bitcoin. And the third one, which is arguably for many, the most important is returns. So obviously we've all seen it's on a regular basis, people making predictions. Let's throw predictions aside. Bitcoin is the top performing asset in 12 of the last 15 years. That's not an opinion. That's a fact. So to your point there, that combats or gets rid of those arguments in terms of volatility, etc. Again, just look at the data. Forget about anyone's opinion. Just look at the actual data. That's what it is.
Don, how could people learn about the course?
So they can go to our website. You can see it behind me, DACFP.com. And as I mentioned, there's 2 different courses. For those that are financial professionals, you can choose that track. Or for crypto curious regular retail investors, you can choose the investor track. And it'll list out all the different modules that are in there, and you can decide which course is best for you.
Well, we're thrilled you're doing what you're doing, Don. As the Investor Choice Advocates Network, we are excited that investors have the choice to pick advisors who know something about digital assets and blockchain technology. So we really appreciate you coming on and are enthusiastic about your project. So good luck. Thank you for coming on. For everyone else, if you want more information about ICANN, you can go to icanlaw.org, and we'll see you on the next Capital Ideas.